Welcome to Market Overtime. I'm Nicole Petallides on the floor of the New York Stock Exchange. My guest today is responsible for bringing some of the world's leading companies to list right here at the NYSE. Recent IPOs at the NYSE include Reddit, Birkenstock, Kava. Joining me right now to discuss the IPO landscape and so much more, Michael Harris, Global Head of Capital Markets at the NYSE. Michael, thank you for being with us.
Thanks for having me, Nicole.
So I understand the NYSE has a very full IPO pipeline for 2024. Tell us a little bit about how it's shaping up.
Yeah, it's interesting. It's become very full for a couple of reasons. On one hand, we've had a number of companies that have been in our pipeline since really going back to 2022. And so on one hand, they're waiting for the right opportunity, the right window to think about when it's time to come out. And then at the same time, we've had a number of companies in conversation that have been adding to that pipeline over the last 24 months. So on one hand, it's very diverse from a wide range of industry types and also sectors, but it's going to be a pretty exciting next few months.
And you came on board about almost 2 years ago,
Yep.
And just so people fully understand, I mean, you have a wide background. You actually were working in the U.S. Treasury under the Obama administration. You were at Citadel. You've been on all sides of this, and now it's your job to be a closer and bring in the world's leading companies that are private and give them access to the capital markets. So what are some of the things that you tell them? Clearly, this is the financial capital of the world. How do you entice them to come to list at the New York Stock Exchange?
Yeah, well, thanks. It's very kind of you. I try to think about our role really as being advisors in the process and being partners with our companies that we're working with. I think we have one big advantage just in terms of having the gold standards of capitalism here at the New York Stock Exchange. You know, we do have the benefit of working with a number of really just leading brands within our community of companies, all the way from companies like Coca-Cola and McDonald's to Spotify and Snowflake, which was one of the largest software companies to ever go public. Mm-hmm. So it's a wide range of issuers, and so that really leads to companies that want to be a part of that community. So I think community is a huge part of what gravitates companies towards the New York Stock Exchange, in addition to our leading market model for liquidity and also visibility in terms of this stage really being the centerpiece for companies being able to display their brands.
There's nothing like the New York Stock Exchange. I mean, this building was built in the early 1900s. The bells are broadcast worldwide, one of the most widely watched viewing things that people watch. And here we have the human element. And I'm sure some of the companies like that. They like that we have the technology, which has truly evolved, right? We've gone from 8ths to 16ths, and we have the handhelds, and I think people probably like that, right? Do they like that they have a designated market maker watching their stock throughout the day, as well as having the advanced technology?
Absolutely. I'd say in many respects it's crucial because one of the elements of the U.S. markets is that you don't have just one area where your stock can trade. It can trade in multiple markets, on exchange, off exchange. And one of the key elements of the market maker is the ability to be a key point of contact for companies. And so as you think about the role of the chief financial officer, a IR officer, oftentimes they're tasked with being able to pull information about what's happening with their stock on any given trading day. And trends within the marketplace can be impacted by not just what's happening here on the floor of the exchange, but in other asset classes or on other exchange venues. So having someone that's a key source of contact and also as capital in the marketplace is very important for a lot of finance teams.
Right, and the DMMs work closely with the C-suite of those companies. I'm sure they have the ability to pick up the phone and call in to the NYSE and ask whatever questions, or maybe give a heads up on something if there's going to be some breaking news. When you think about some of the criteria, and you work with so many companies, and now I want to talk about some of the companies that are in the pipeline. I know there's a lot of AI there, but when you think about the criteria, we always think about the path to profitability. What are some of the criteria to list at the New York Stock Exchange? We've seen companies list or be delisted. What are some of the elements you look for when you're advising them to give them a successful path?
Sure. You know, I think it's A lot depends on the sector. So I think there are trends that we see on a general basis in the marketplace right now, but it also depends on the story that each company comes to the market. In general, what we're seeing right now is, to your earlier point, there is much more of a focus from the investor base towards companies that have scale, growth, but also a path to profitability. And so unlike what we saw in 2020 and 2021, where there was much more of a focus on growth at all costs, now there's much more of a discipline in place and much more of a focus on companies that are well run, well managed, but also at the same time have a very tight expense control in place as well.
Right. So we're not looking for micro caps here. I mean, you're talking about scale, you're talking about revenue and growth year over year. I mean, slower growth may be okay, but you have to continue to see that growth. I mean, cash flow is probably something that you look closely at. I know throughout every time we cover earnings, that would be something that we would look for. And companies do come to list here and other venues not being profitable yet. That being said, what would be some red flags that right away you would say this needs, because you have a whole team of experts that would advise companies. What would be a red flag that you would say this is not going to work? Yeah. We need to work on this. What would be a few things that you'd give them a warning?
Yeah, sure. Well, I think one of the benefits of listing at the New York Stock Exchange is that it's a multi-step process before you actually get to become a public company. So in addition to our team of professionals that work with them from a capital markets perspective, we have a separate team from a regulatory perspective that also works with companies that does a pretty extensive background check on any issuer and any management team that's going to be working with our community. And so if there's any red flag, even from something as large as, for instance, criminal dealings, they will be...
What was that? Criminal?
Yeah.
I couldn't hear, I'm sorry.
So they do background checks, for instance. Okay, and so if there's something that rises as a red flag in that instance, our regulatory team will be very much focused on that.
What would be on a balance sheet that you would say, I know sometimes we'll have companies that could be overvalued. People think maybe their company is worth more than it may be. But what would be some things on a balance sheet that you would look for?
Yeah, it really depends on the circumstances.
Right.
I think every company in every sector is going to be a little bit different.
Okay.
And so we try to be, on one hand, very flexible in terms of making sure that we don't pigeonhole every company in the same exact way. But at the same time, we do have a multi-step process and make sure that we do the proper due diligence with every company to make sure that it's properly suited to be listed on our exchange. And
it makes sense that different sectors might have different valuations or whatever. Is there a minimum valuation that
our financial standards are still pretty set for the marketplace as a whole. So 200 million market cap. 400 Ron-Lot shareholders. So there are some financial standards that are in place just to make sure that every company that's listed has a very minimal financial standard in place.
And they have to have some history, right? I mean, they can't just create a company and then come running to you 2 days later, right?
Absolutely, yeah.
I mean, don't you want to see some historical statistics and data with that?
Absolutely. It still has to be an operating company for several years. There has to be a minimum of multiple years worth of audited financials in place. So these can't be companies that are just created overnight and listed the next day. Right,
understood. Let's talk about some of the names that might be coming up. I know you can't name names. We can go back. And Amer Sports was a great one. Anybody who's a sports fanatic, I walked in and I saw the mannequins with Arc'teryx and Wilson, and they have all the sporting good brands. You have Reddit, Tiendas, that 3B, Kenvue, Birkenstock, Klaviyo, Kava, a lot of fun. Kenvue, huge. Yeah. What does it mean to the New York Stock Exchange? Because, we value IPOs and we look to IPOs. Number of IPOs, valuation of IPOs. That was a biggie, right?
Yeah, it really was. And we've seen a number of some of the largest brands in the world that are attracted to the exchange, partly for the visibility. And to your point, when you're a company like Amer Sports, they are selling to their customers globally. And they want to reach the largest audience, and there is no better venue than the New York Stock Exchange to be able to do that.
We recently had Reddit, and Snoo was up on the podium. I got to meet Snoo later. That was exciting, and I saw on the internet people were saying, congratulations, Michael Harris, and I know every single thing is a team effort. But let's use that as an example. how long do you talk to a company like that? What kind of questions do CEOs, maybe not that particular CEO, ask you? What would be, just fire them off. What kind of questions do they say? I want to list here. Let me ask you this.
Yeah, I mean, look, the process of the exchange selection can take months to years, and it really depends a lot on the company that we're working with. Some of that can be based on the company's location. So cross-border transactions sometimes can take a little bit longer than others.
Right.
Industries can also vary a lot. But in many cases, we're talking to companies years in advance from them making that decision. And some of the questions that are often raised are questions about visibility. So for instance, how can we use the venue to best tell our story? And so we're hearing a lot of conversations with not just people in the C-suite on the financial side of the business,
right,
but also people from the marketing side of the equation. And they want to understand how they can work with our marketing team to best tell the story for the company and best talk about the brand.
Right, as I said, largest, this is the financial capital world. I don't know, my last print, I think I saw over 25 trillion or something.
Yeah.
Is that about right? And I've been here for a lifetime, and I truly love it from the bottom of my heart. And I think that while we've gone from 5,000 folks on the floor to several hundred, it still has such an important footprint. Market share is another issue, right? And I know that market share has diminished some because the market is somewhat fragmented and has evolved over time. But we still have over roughly 20%, or what
Yeah.
would you say?
Yeah, it's been pretty consistent over the last several years, about 20%. Yeah.
Do you see that going down or up?
It's been pretty consistent for a
Right.
while. And the New York Stock Exchange is still the largest venue in terms of liquidity. The close and the opens still tend to be also the largest liquidity events overall. And I think there's still something to be said for having a trading floor environment where special situations, large liquidity events like index rebalances take place, where
Yes.
there is the value of a floor community to help work special orders. And we're seeing the value of that on those big liquidity days.
Yeah, for sure. When you have those, like a Russell rebalance or an
Absolutely.
S&P rebalance, quad witch would be a
Yeah,
heavy volume
yeah.
day. So those are heavy volume days. How do you, when a company is at the NASDAQ, and sometimes we see companies transfer from the NASDAQ to the New York Stock Exchange. Sometimes if they're at the NASDAQ, they might be listed on the NASDAQ index, or maybe that might be something that they woo them as one of the elements. How do you say to them, is it the visibility and liquidity and the human element to get them to come over here? And what
Yeah.
kind of process is that? How long does that take?
It can take a while sometimes. I think for every company, there's a different reason why they make that decision. I think we've been fortunate over the last couple of years that trend has really been moving in our favor. Last year was a record year for transfers. We had 32 companies that transferred to the New York Stock Exchange.
Oh, very nice.
Including the second largest company that's transferred in our history, Fiserv. So we've seen a trend recently of a lot of companies that have made that decision to come here. And sometimes it's visibility, sometimes it's more the liquidity element, sometimes
Right.
it's more being able to be a part of the community of companies that are very similar to themselves.
Right. I mean, a huge community of companies,
Absolutely.
without a doubt. I mean, we had I forget what the event was, but all the companies were on display on one day, and it was so exciting. It was a monumental anniversary, and every company got to showcase whatever it is for their products. As you're getting those companies to transfer over, I mean, you mentioned Fiserv, and people used to think tech companies went to the NASDAQ. That's not right, is it? That's not right at all, is it? Tell them why tech companies come to the New York Stock Exchange.
Yeah, I mean, it's interesting. Since 2014, when we changed our listing standards, the majority of tech proceeds have actually been raised on the New York Stock Exchange. And some of the most iconic brands in technology are actually listed here, whether it's Spotify, which most everyone is familiar with if you like music, to Snowflake, which is the largest software IPO in the world. They've come to the New York Stock Exchange as well. Salesforce being another great example. So some of the most iconic brands in technology have been listed here. So I think it's really just a function of kind of separating what I think perception is versus what the facts are. But for a lot of companies, when they go through that process and they actually understand and they kind of do the research, then that's when they realize that they want to be with the community of their peers. The other element that's also worth pointing out is one of the things that separates the New York Stock Exchange versus other exchange venues is that the average market cap on our companies is much, much larger. So comparing ourselves versus, for instance, other US exchanges, the median market cap here is about 15 times larger. That's even including some of the larger names like a Microsoft or NVIDIA or others. So we do really cater to the most liquid, the largest cap companies in the world to be listed here.
And I think about these AI startups. There's a lot of them. And AI has sort of evolved in itself. I mean, it was a lot of software. Now we're hearing more about it moving into hardware. Tell me about the AI lineup. I know that you've been working with companies closely. 2? More than 5? 10? Some are interested in this year. Some are interested in 2025. Could you break it down for us a little bit? And within AI, we say, generative AI. What do we mean when we say AI?
Yeah, it's interesting. With AI, I think people are really looking at this as the next super cycle. So similar to mobile, similar to the cell phone business, similar to SaaS, this is really going to be a transformative event. On one hand, you have use cases that are real, and the other element is that you have enterprise budgets that are lined up to spend real money behind this. So this is going to be a trend that is also going to impact every industry. So on that alone, there is going to be a significant amount of focus here. I think when you look at the pure play AI companies, a lot of those are really looking at financing themselves in the private markets because that's very much cutting edge technology. But there are a number of companies that are incorporating AI into their business cases, and those companies are actually flirting with public markets, and so they are going to be looking at, potentially looking at the public markets over the course of the next 24 months.
With the AI companies that you mentioned that were pure plays, they're self-funded, that could be a direct listing. Right? That could be a direct listing because then they don't have to raise capital, they don't have to go do the roadshow and such. Can we expect a handful of AI companies in the next year?
Possibly. I think a lot depends on the economy, a lot depends on market conditions, a lot depends on the growth trajectories of these companies. But I think what's interesting about the sector is that the growth potential of these companies is so large, and they are delivering on a lot of the forecasts that they've been discussing over the last several years. So there's a lot of potential that's there. We're hopeful. We're watching them very closely. We're talking with a lot of them. And it seems like there's a very good potential over the next couple of years.
Are they similar? Sorry, are they similar to each other, or are they very different from each other? What differentiates? Because we're saying, if I say a handful of companies and you say possibly they could be here within a year, what differentiates one company from the other?
Yeah. Well, I think it's interesting.
You were describing them.
Yeah, it's all about what the specific use case is, right? Like when we say AI, that can mean a lot of different things to a lot of different people. Is it on the software side or the hardware side? What sector are they focused in? And so it very much depends on the specific company, but each one has a pretty interesting use case, and depending on the industry, I think there's an interesting case to be made for public markets.
So that goes into the tech realm. What sectors seem to be thematically, when you think about the IPOs that are coming to market, are you seeing tech, obviously? Any other sectors seem to be front runners?
Yeah, I think tech is obviously the one that gets the most focus, mostly because from the growth perspective, that's really where the biggest potential lies. One of the challenges for the buy side is obviously generating alpha as a part of their job. And if you look at tech in general in the public markets, and you look at companies that are operating at scale, so consider that to be roughly companies larger than $2 billion, generating revenue north of 30%, it's a relatively small number of companies that are public. So if you can fit yourself within that bucket as a private company, you're going to get a lot of attention. So there's a lot of focus on companies that are in that profile to have the ability to go public. But that being said, there's a lot of other companies in other sectors that also are in the pipeline as well. We just saw PAX, which priced last night, going to be opening fairly soon behind us on the floor of the exchange. They're a nursing home provider, but they're operating at scale, one of the largest nursing home operators in the U.S. UL Solutions, which is a technology services company, which is expected to price tonight. And you mentioned earlier Almer Sports, which is in the sporting goods area,
so
priced earlier this year. So it's a variety of companies.
So you're not going to give up, whether it's healthcare or energy or industrials or anything like that. You know, Michael has all the secrets of what's coming in the pipeline. I know that you're not really allowed. Can you say whether a majority, are you seeing, obviously a majority must be here in the U.S., are you seeing, I saw in Barron's, there was an article, more European firms hope to list in the United States. Are you finding foreign interest, same, picking up a lot?
It's been picking up, but that's part of a trend that we've seen over the last several years. And so part of that is a function of you've seen declining liquidity in European markets, not just in the UK, which I think is the article that you might be referencing, but in Europe as a whole. But also you've seen just a different market in the U.S. On one hand, the market for U.S. investors is much deeper. You tend to have a more sophisticated group of investors in the U.S. Investors in Europe tend to be generalists by nature, whereas in the U.S. you tend to have specialist investors, investors that are focused on technology or healthcare, et cetera. And so that does create the ability for them to be much more focused on being willing to pay a higher valuation. And that's also reflected in what you're seeing in valuation differences.
References Europe, and you mentioned Europe liquidity versus here and the market conditions. Asia, India has seen incredible growth. Are you seeing interest from other areas besides Europe? If so, from where?
Yeah. It's been fairly broad. I'd say there are certain marketplaces that have developed a fairly robust domestic capital markets area. So the Middle East is a great example of that. India is a great example of that. They've had explosive growth within their own domestic capital markets environment. Some of the hindrances for those companies that are looking to do dual listings in the U.S., some of that is regulatory driven. So it depends a lot depending on the jurisdiction, but as a general trend, the U.S. markets, just given the liquidity, still tends to be a big draw for companies and also for investors as well.
I have a lot of macro questions for you as well, but just the final, as we talk about direct listings, SPACs, IPOs, do you expect most of the names that are coming to be IPOs? There was a time SPACs really picked up, right? And there is concern sometimes that those could be overvalued. I think that's fair to say, because of the way that they're put together. Do you expect more IPOs than SPACs?
Yeah, I think that's right. SPACs, if you kind of think back to the boom time of SPACs in 2020, 2021, that was very much a function of a few very specific points in the market. On one hand, low interest rate environment. And the other element being, from a regulatory perspective, the ability for companies to issue forward guidance, and you can't do that in the IPO market. A lot of the SEC rules have really been written to try to reverse that. So I think the likelihood that we would expect there to be the same type of issuance within the SPAC world going forward is probably going to be limited.
Right, I understand. We're almost out of time, so maybe we can do somewhat of a speed round. I mean, we've gone over some of the topics like the macro economy and such. Just a final thing, we're getting the handhelds, the new handhelds. I hear them beeping sometimes. I think some people are concerned that they may lose market share here in the changeover from the handhelds. I know they must bring some great thing here, right? We're going to the Pragma Polaris handhelds. Just a quick thought on that.
Yeah, I mean, we've been in the process of updating that since 2021. That is something where if you look at the older handhelds, that technology is somewhat outdated. And really, this is a gradual rollout of just keeping the technology consistent with what we're seeing across other open source API environments.
Right. Does it take some liability off the NYSE maybe too, perhaps? I don't know.
Yeah, that I'm not aware of.
Okay, so how about trading hours? Do you think those might change at all? We're at 9:30 to 4 since I've been here for 20 years.
I hope not.
You haven't heard anything about changing trading hours?
I have not heard about that.
And also, what you just recently were a judge in the EY Entrepreneur of the Year, Winnebago, I think, won that. just what would you say would be some attributes of a great entrepreneur?
Yeah, no, it's a great question. One of the things I love about my job is just being able to meet entrepreneurs all over the world.
Right.
And I'd say there's a couple things that are pretty consistent. One is just creativity. Obviously, the ability to take on a lot of risk, but I think more importantly is just building great teams and execution. And that is something that has been really fascinating to witness over the last several years. Building diverse teams that are not necessarily all thinking alike, but that can provide great feedback. But the execution part is really the key.
All right. Also, we're in a high rate environment. We've been getting sticky inflation. We've seen it. You were at the U.S. Treasury in the Obama administration. Any sort of thoughts on the big picture on our economy? Because that's also the landscape for the folks that are listening. They want to know we have a good economy.
Yeah.
Do you feel like we have a good economy?
Yeah. I mean, we have a great economy. And I think it's interesting the narrative, how it's changed over the last several months. We went from having a viewpoint that we probably have 6 rate cuts to 3 rate cuts to now we're talking about potentially hikes. So I think the narrative as it changes is also going to have an impact on the secondary markets, an impact on my business in terms of how issuers think about open windows for capital markets issuances as well.
So
it's
that
something
could help you.
It
This
could
could
help.
help you.
It could help. So it's something that we watch very closely.
Yeah. And people are going, obviously, to private equity a lot, too, because the banks are a little tight with the credit and the lending, right? Are you seeing that as well?
That's been a trend that's been in place for a while. Private equity, venture capital, that is another alternative source of funding for a lot of companies.
Yeah.
Both have their own issues in terms of just their own dynamics and environment, but generally what we've seen is the public markets remain a great place for transparency, a great place for public investors to be able to generate alpha, and a great place for also individual investors to generate alpha as well.
Just finally, Mag 7, market breadth, we've seen an improvement. Any thoughts on some of those big names? So some of them even go from growth to value. People always still want to buy in on those big names.
Yeah, I mean, I wouldn't comment on any single name, but I think as a general view, one of the things we've seen this year that's been different from last year is obviously there's a lot of talk on this show and on other programs about how narrow the breadth was in terms of performance within the market for particularly those names. This year it's been a little different. So, roughly 70% of the S&P 500 is trading above their 200-day moving average at this point. So we are seeing a much more broad rally to the marketplace. I think that's healthy for not just technology, but I think for just a variety of sectors as well.
I can't leave out Bitcoin because there was such a big monumental moment in January. Those ETFs were approved, and right here we have GBTC and Bitwise.
Yeah.
People are looking for Bitcoin 100,000. Is that possible? And how exciting has it been to have something, evolve like that?
Yeah, it could be possible. I mean, we're big believers in more choice the better here at the exchange. So I think the optionality for investors to be able to invest in Bitcoin directly or through a mutual fund or an ETF, we think those are great options for investors.
I think we can leave it there. Did I leave anything out? And just your final thought here about how it feels to be here in the financial district, because you've had certainly a long career, but your excitement to be here and getting more NASDAQ transfers. You talked about last year there were over 30. You face a lot of challenges, but it's exciting, I'm sure. Final thought?
It's great. I mean, I've always been a huge fan of being here. I work with a great team. I work for a great boss, and also I've had an opportunity to work with a lot of the same people that I've worked with for years. As you mentioned earlier.
You like the challenge?
And I love the challenge. Always love a challenge.
All right, so it's game on.
Always game on.
And the playing field's looking good?
It looks great.
All right, I like that too. It's really nice to have you on here today, Michael. Thank you so much for being with us. Michael Harris, New York Stock Exchange Global Head of Capital Markets. Thank you for being with us. And thank you, friends, for being with me here on Market Overtime. Make sure you download the free Schwab Network app. It's available in the Apple App Store. Tune in 24/7, schwabnetwork.com. I'm Nicole Petallides. Thanks for watching.